The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 29th, terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, and I know, and I believe that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way, and I do mean the easiest, it is the easiest way to make sure we do that. It's to always remember that life happens for us, not to us. That's right. When you're going to make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Internationally, 727-445-1044. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 176 points. He's trading at 18,161. S&P down 19, trading at 2152. NASDAQ Composite up 57 points, trading at 52.61. Russell down 16 points. Let's just cut right to the chase here right now, because this is a beautiful market where one day, one moment, the bulls think they are the ones in charge. The next moment, the next day, it is the bears that think that they are in charge. But who is it that's really in charge here right now? Let me just do this. If you're watching us on TigerTV, this happens to be the SPY. And let's go ahead and get rid of the A to B equals CD pattern, which, by the way, has a price projection of 230.08. If you're wondering where the SPY is going over time, it's called 230.08 and then 238.63. But that's not really what I was going to show you. What I was just simply going to do and just try to explode it up in a nice big fashion. Here's the week that we're in right now. It's Thursday afternoon. Yeah, it's just past 1 o'clock. But the reality is this week, so far, the roller coaster ride, it's been nothing more than an inside week out here. The bulls nor the bears, either party that believes that they are the ones that are exerting their force and their energy right now. Let's just be real with regard to where the market opened, where it's trading right now. That's what's going on the weekly basis. If we go take a look at the QQQ ETF, so we'll do this instead of the indices out here. What is the message? Same gosh darn message out there. If we take a look at the Dow Diamonds, what is its message? Same gosh darn message out here. We're trading virtually at the same place that it opened on Monday morning. So either side out there, no, I wave the magic finger. No. Don't get too eager on one side or the other. Yes, I'll go ahead and put the IWM up. Let's go see what it's doing. In the case of the IWM, okay, trading just slightly lower out here. Still an inside week. Oh, by the way, it's A to B confirmed, I should say. Okay, confirmed by who? Confirmed by the president, right? Be confirmed by Congress. Be confirmed by the buyers and sellers, at least, right? That is our Congress out here. Better than the bozo. I'm sorry, I didn't say bozo, did I? Better than the folks that were on the boob tube out there, for goodness sakes. What a waste of taxpayer dollars. Go to work instead of doing what they were doing earlier today. And don't keep repeating the things that we already know. If you've got something new, add it. If you've got a new question, go ahead and perform it. Otherwise, get off of the stump. And that was kind of a play on words right out there. Not that I'm for this guy, by the way, but that was the play on words out here. If we take a look at the IWM, by the way, it's confirmed. I did say confirmed, did I not? Confirmed. A to B equals CDT upside 133.19. It's not a matter of if. It is only a matter of when. And somebody asked about the IBB. If we just simply do the same thing for the IBB, I don't know what this is going to show for the week, but let's go find out. Come on, go ahead and populate. Why is it not populating? That is not a good sign out here, when the system says resolving symbol. There's not that much going on the system right here. And sometimes that precedes a crash. There we go. On the weekly basis out here, if we take a look at it for Mike K in the den, and we take a look at the IBB, what is it doing? We know where there's, some pretty significant resistance. It really struggles to get over the $300 mark out here, Mike. But there still is a little rising trend line out here, right? If we just look at trend lines, it's not even made its way back to the bottom of that trend line. Maybe that's where it is headed to. That's what the weekly chart is showing us. If you and I go ahead and put on daily and weekly market profiles out here, we're going to see, voila, it says the IBB can easily just go ahead and pull back, be nothing more than just a pullback inside a rising trend line out here, pulling back into the 281 level, 281.73 specifically, happens to be the bottom of its TAS weekly profile low. So that should be some real strong support for you inside of the IBB. On a daily basis, we go see what it's doing on a daily time frame. And this is a frustrating market for many. It's not frustrating if we just go pay attention to really some key levels of support and resistance and see what's going on. Today's pullback, 778,000 shares. Of course, that in essence is testing a swing point with 1.4 million shares. So math-wise, it looks like it's about the same. But to give you the actual number out here, because I don't want to give you about the same when we can actually give you the real number. So we're at 779, about 3.5 hours of trading, about 1.4. So you're pulling back into a swing point with similar volume, not blowing it out of the water or anything along those lines. I'm referring to that key reversal bullish engulfing session from September the 12th. So what this says to me, Mike, is more likely than not, price pulls back and tests the weekly profile low around 281.73 out there. Volume picks up to the upside, then it goes ahead and it tests the low. What's the key number for you to be paying attention to out here? It's really very simple. I give it to you. I give it to you free of charge. The number on any continued pullback inside the ES Mini is going to be 2132.25. If that level cracks, then the Bears actually can go ahead and have something to cheer about. They wouldn't cheer, right? Have you ever seen a bear cheer? No. What would a bear actually do out there? Lick its chops, come out of hibernation? I think it's still a bit, it's just going into hibernation. I don't know. But in any event, the number to be watching out here is 21.3225. You break below that, then that could spell some real trouble. Now, what do I mean by real trouble? By real trouble, I mean it would then likely pull back to about the 21.07 level out there. And so that's what you would want to be watching for. But otherwise, as we just looked at, and the reason that I went ahead and put the weekly chart up on the screen out there is really just to make sure that you and I keep things in perspective. And what the perspective is this market is in nothing but a trading range. There's your trading range. We've got the ES Mini with the move to the upside, that descending channel line, to the downside, the rising channel line. Interesting how price has been contained within both the ES Mini and the Dow out here. The cone of silence. Other than this cone head out here, there's no silence from me, but it looks like the cone of silence is at play. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. First question coming in by email. I see out here. Asked me if I would take a look at volumes inside of the ETF structures out there. So absolutely, we can go do that. Let's take a look at the daily volume out here. And let's start off by taking a look at the QQQ series. So about 15.8 million shares as we speak right now. What does that equate to on a straight line basis at the end of the day? Somewhere, oh, there we go. I said the end of the day. I want to make sure that I always say at the close, right? At the end of the closing session or something along those lines, because you know how I hate the at the end of the day out there, and I don't want to, participate in that at the end of the day garbage out here. But still, at the end of today's closing session, voila, there we go. We would estimate around 24 million shares to the downside. Now, the last time on that, so where does 24 million shares really take us to? The last real big move to the upside was on September 15th. It had 39 million shares to the upside out there. So if you're wondering what are the Qs doing with regard to volume, basically nada, zilch, just a normal, orderly, sideways just type move out here. Testing the TAS weekly profile high, which could be support. That's 114.58. You close back above 118.01. That's the high. 114.58 was the low. We're nowhere near that, but 118.01, you close back above that. It says you're going to go on to make a new high. I'll just simply go on the record and say the Qs are going to make a new high. The Qs are going to go ahead and take out the 119.22 level, and they'll do it between now and let's just choose a date, October 12th. How about that for a date? So we'll see a new high inside the Qs between now and October 12th out there. Let's take a look at the next, because this email did not indicate which ETF. Which index ETF that we would take a look at. So we took a look at the IWM on a weekly basis. On the daily basis right now, you've done about 11.5 million shares, equivalent to about 19 million shares. And by the way, remember the IWM had that island reversal pattern? Yank! That was bad. Basically, nada, gone, adios, see you later, hasta la vista, baby. That was gone. That was toast. It was French toast. It was every kind of toast. Texas toast out there. That was gone yesterday with the move inside the IWM. So the most bearish pattern, and of course you know the expression, nothing more bullish than a failed bearish pattern. Well, and I didn't put a lot of weight inside of the IWM's island top out there. But if you were ones that did and you thought that that was bearish, well, then you ought to change your mind because that pattern is now vamoose. It is gone. Pull back today, as I say right now, with about 11.6 million shares. Last move to the upside out here where it's trading into had about 30 million shares. You're nowhere near. Did I say that? Nowhere near 30 million shares to the downside inside the IWM. So no big deal as we speak as of 121. The Dow Diamonds, let's go take a look at it. Volume so far about 1.8 million shares. That equates to about 3 million shares at the end of today's closing session. Last time really down into these levels, we were dealing with 7 million shares. 7 million versus, what did I say? 3 million shares? Come on, folks. Let's just make sure that we stay real here. Now, I can't control what happens next, but I can tell you as of 1:21 p.m., this market is doing the exact same thing that it has been doing for so long out here, so long. You just want to cry. No, you don't want to cry. You just want to recognize what the market's doing. It is a chop fest out here. The best way to avoid bruising is to stay out of a chop fest. And that's really what I suggest that you do. Longer term, if you're longer term, you stay put. You stay put out here because these markets are going to higher ground. You stay put. You take whatever decline, whatever type of retracement that is going to come at you because these markets are going to be moving higher out here. Now, with regard to the SPY out here, daily chart we're looking at, so far today's volume, 58 measly shares to the downside. My goodness, the last time that we were down in this range, 168 million shares back on September 12th, even with the gap down on September 9th, there was 221 million shares. So nothing more. Don't let anybody, I do mean anybody, don't let anybody tell you that this market is doing anything other than moving sideways out there. Now, for me, it makes it more difficult to really provide you with a ton of information, right? Well, actually, I did provide you with a ton of information. You might have saw the market's down 1 cent. I don't care if it's down 250 at the end of the day, unless we start breaking through key levels of support out here. And until we do that, it's just simply markets that are chopping around out here, one moment giving something to the bears, which, by the way, I believe, if I am not mistaken, which I could easily be mistaken, but if I'm not mistaken, don't the bears start, isn't that part of the 6-month seasonal cycle? Don't bears start to hibernate in September, right? September, October. That's the hibernation period out here, right? Once they've hibernated the bears, part of the seasonal cycle is then the market is free to run to the upside, through May or so forth. So, whatever bears are left, many of the bears, are hibernating. Of course, I've seen a few, probably you have, right? I saw one yesterday. It was in the hot tub of someone's home in California. So, it depends on where you live, Gator. You're exactly right. In Florida, the black bear, they never hibernate, right? They just simply don't hibernate out here. And, of course, at Suite 618 at Cleveland Street, at TFNN, that's a different kind of a bear, even though that bear can hibernate from time to time. So, with regard to the general market, that's really what's going on out here. I'm really not that interested in telling you where the advanced decline oscillator is because it basically doesn't mean a hill of beans these days with this chop fest out here. Of course, if the market finishes real badly at the end of today's closing session, not at the end of the day, but at the end of today's closing session, we could easily see a VIX index that is greater than 10% to the upside. Right now, you're at 15.74. You know the playbook there, right? You have a greater than 10%. You better be looking, if you're a short-term trader, just simply close out the trade, assuming it's an index ETF that you're trading, because you've just got to assume the probability, the reliability is on your side that the market is, you're going to see the futures market bounce or move higher. It's a bounce type bottom type of thing. It does it over and over again. Are there times when it fails? Yes. But which set of probabilities do you want in your favor? The 80, 85% or the 15%? So you just simply make your choice out there. So and that's what's going on inside of the VIX index out here. It's just this is the market that we are in. Yesterday, how about yesterday? Got off the air, said, hey, the way that things are looking, these markets want to move higher. And it really wasn't that long after that the OPEC, they listen in to the TFNN show. They listen in, right? They don't call in, but they listen in and said, okay, now is the time for us to go ahead and release that news. Stevie says the markets are going to move higher. Let's go ahead and help them out, as they did, and said they were going to go ahead and cut back on production out here. Now, here's the real key with regard to, this is the current contract here. Let's go ahead and get rid of some of the lines. We'll add these back one at a time just so that you can see what's going on. Of course, we're going to do all that when we get back from this next breakout here. But the first lines that you really want to take a look at, I believe, let's see, do we get rid of that? No, we want to keep that line out there. Probably the A to B equals C to. There we go. And this is really the pattern. Oh, we want to get rid of the TAS profiles too. There we go. So when we come back from this break, let's take a look at the descending price channel line. Let's take a look at the rising price channel line. Let's take a look at where a breakout would take us. Let's take a look at where a breakout doesn't take us. And we can look at anything else that you'd like. Any time frame that you'd like. Just give us a call at 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So if we take a look at the current contract for light sweet crude, beautiful pattern out here, very much similar. Oh, man, I would be flunked out of college for sure. Good thing that was a long time ago. But you know what I meant out there. It's very similar to the patterns that we took a look at, a little shorter term time frame patterns, to the ES, the NQ. No, it wasn't really the NQ, the ES and the Dow, the YM, the futures contracts, just trading with inside that cone of silence, and so too is light sweet crude. Earlier at about 12:15 or so, it appeared as if light sweet crude was going to go ahead and break through the top of that descending price channel line out there. It still may. Right now, we can see that it is very stiff resistance, just like that number 2132.25 that I gave you for the ES Mini. As long as that level holds that support, and it has since September 18th, today's the 29th. That is a very key not hidden because you're here with me at TFNN. So that is a very key level of support. Well, so too are these rising and descending channel lines when we take a look at light sweet crude. Now, here's the thing. If light sweet crude does not break to the upside, you tell me where price is going to head to. Exactly. It's going to head to the bottom of that rising price channel. I don't really care what OPEC says they're going to do or not going to do. Price is going to be contained inside this cone of silence. On the other hand, if there is a breakout, if traders decide to go ahead and really bid this to the upside, break above that rising price channel, then we've got action. And that action, we can take a look at a number of different tools to identify where price would likely go to. Well, the first tool that we'll put out here is going to be our TAS market profile. So we'll just take a look at some levels of horizontal resistance up ahead. We can see that the daily point of control at 48.53 in essence was hit. We saw 48.32, close enough for both you and I. However, if price is able to break above this descending price channel line out here, you've got to expect that we're going to see price get to that 48.53. Then it's going to, and here's where we're going to see real turbulence, right? Here's where the pilot of the show is going to say, be careful, those oxygen masks, they may fall down. If they do, stick your nose inside that mask before you go ahead and take care of the person next to you. That way you're still breathing so that you can take care of the person next to you. And that says that that's going to occur at about $50, $49.75 on the weekly, $50 even Steven on the daily. But if price is able to break above those levels, then you're looking at a measured move. You might say measuring what? What we would be looking at is really the base of this triangle. So if I go ahead and I take this little box right back here, right, it's measuring in essence the base of that little wedgie out there. And once light sweet crude, if it is able to break above that little TAS market profile daily and weekly, then you're looking at a price move into that 61 level. And confirming that type of a move would then just be your A to B equals CD. And your A to B equals CD, you'd be looking at the large one. We could look at the large one. We could look at the small one. Let's look at the large one out here, because this is what the large one looks like if we can actually get it. There we go. There's your A point. Here's your B point on June the 9th. Come on, work. And then the C point looks like down here around August the 3rd. 1-to-1 gets you to $60, which is really about that measured move out here. So one thing at a time. Here's what we know about light sweet crude. It cannot get above this descending price channel. Price is going to head down to the bottom. The bottom gives you a price projection somewhere around $43 or so, 43.60, 75.80, somewhere around there. So light sweet crude is at the precipice of what it wants to do. If I take a look at a 30-minute chart out here, the 30-minute chart shows that the recent retracement has been nothing more than a test of its oscillator unchanged line, 47.76 being that number. So if light sweet crude is able to keep the 47.76 as a level of support, then it says no reason for it to not continue to move higher. You get below that, then what it says, more likely than not, we go back and we revisit the bottom of that rising price channel. That is Stevie's take on what the charts are communicating to you and I on light sweet crude. A question that came in was gold yen chart out here for Duffy. And so Duffmeister, I think that's a nice chart. Now I've got to go see if I can easily find that for you. I should be able to. It should be underneath my gold yen directory. The question is that what I called it? So A, B, C, D, E, F, G, right? That's how I get to my letters out there, right? And if we take a look at gold priced in euros, gold priced in U.S. dollar index, gold rand correlation, gold silver, gold versus yen. How about that gold dollar chart? Gold versus yen out here. That's a chart that's going to show up on my screen. U.S. dollar, Japanese yen. You can see the nice correlation that these two have. You can see gold right now running into the bottom of its rising trend line. Again, we're using a line chart out here, so we're looking at closing sessions or closing price at this stage. The yen, a little bit stronger, right? So it has not made its way all the way back to the bottom of that. So even if you were to see gold break through that rising trend line out here, until the yen breaks through it, I don't think you would have a unanimous decision on the direction of and the correlation of these two out here. So hopefully, Duffy, that answers your question. If not, post the additional question that you might have had other than just simply gold yen chart, please, and I'll be happy to go ahead and take a look at it for you. So hopefully that assists you with what you are looking at out there. Now, any other questions that have come in? Let me check the old phone system out here. And yes, I do hate this new Apple operating system. It's like I've got to break into my own phone just to see what in the Sam heck is going on out here. I do not see any other email questions out here. I don't think that there's anything else in the den out there. If there is, please just repost it so that I can take a look at it. Okay, so we've looked at, in essence, we looked at gold by looking at the gold yen chart. Not a whole lot different when we take a look at the silver out here, hi-ho silver. If we take a look at the treasuries, let's take a look at them, see what's going on with the 30-year. Let's go. Can I go to this chart? Lord. I can. I just have to go ahead and now get down to grab it, or we can just simply retype everything in. I hate to redo work when it's already done. So let me try to pull up this other chart out here. We'll look at the 30-year Treasury, get a feel for what it is doing out here. And this is kind of interesting. At the beginning of the day, early this morning, 6 o'clock or so, excuse me, that was a strict pause. It looked to me like, hey, looked like the 30-year Treasury was getting ready to reject its move higher, just simply because it was up against the top of this little rising or descending price channel. And so it begs the question whether or not that's a good top of that rising price channel. Let's do that. That was the continuous contract. Let's say Ixnay. Oh, why was it the continuous contract? I don't know why I pulled that up. Actually, I think that was just a trying to do two things at one time, talk and chew. There we go. Now here's the correct price channel. No wonder that didn't look right to me. I was like, I wouldn't draw price channels like that, would I? No. Here is the current December 30-year Treasury. So this looks better. Now what we're going to see today is we're going to see a 9 count. For those of you that are bowlers out here, if you were bowling with Tom DeMark's system, which is a workshop that I gave just a few weeks ago, you would know that when you get to a 9 count, which will be today, that could be a pause point. Could be a reversal point, or it could be an acceleration point. Wow, was Tom a genius or what? Actually, a really smart guy. But right now, we've got price breaking above a descending price channel, much like oil. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Now, of course, all the news out there, whether it's Bloomberg, whether it's CNBC, whomever, whatever, talking about Deutsche Bank, which happens to be the center panel on my screen out here. And, the thought process is, and it could be, look, you have a big bank like this, that fails or, and we can take a look at stock price as one of those key levels of failure out here that, the world's going to come to an end. I don't think so. Look, Deutsche Bank, as I was pointing out earlier, Deutsche Bank made its high back in October of 2009. So since October of 2009, somewhere around the 80-ish price level is where it's at, $78, somewhere right around there. So since October of 2009, right, and and by the way, if you take a look at where our financials are priced in relationship to October of 2009, well above it. They were in about the $12 or $13 range back then. You're at $19 right now, so you're up a whole 50% or so. Whereas in the case of Deutsche Bank, it's down like from 80 to 11. So I don't know, what is that? That's down about 85%, give or take, right? That's just quick Steve-O math. And of course, with regard to the S&P 500, just simply, no correlation really to speak of. Look, if and I see all the news reports, hedge funds taking their money, hedge funds that have been underperforming the market, right? Just now they're starting to take their money out of Deutsche Bank. I mean, how long have they been there? How long have those hedge funds actually been in Deutsche Bank? Because you can almost pick almost any point in time when they could have been there. And you'd have to say to yourself, how smart are those guys? I mean, what charts is it that those guys are looking at? Because it's not the same chart that you and I are looking at out here. You can arguably say that this chart here has had nothing but lower highs. Really? I mean, come on. Okay, maybe they bought it in July of 2012, right? And wrote it up from, I don't know where they write it up from, $27 to $50. Okay, hey, that's actually a pretty good trade out there if in fact that's what they did. But you'd think you'd have some kind of stop in place or something, because ever since January 2014, where are we? We're in basically October of 2016. We're like, what is that, like 38, 39, I'm not sure. It's like 36. It'd be 30 months or so. I mean, we're talking several years out here, right? Before so bailing out at $11 actually almost sounds like a buying opportunity to when you take a look at the smarts behind that thought. And where's that money going to flow, by the way? They're redeeming. What, are they just going to stick it in cash when they're already behind? I don't think so. Of course, they may be redeeming it and just simply getting rid of their losers to actually pay off that which is being redeemed. So that could be a possibility. But otherwise, maybe they put it to work and chase the old debt aspect of life, right? Trying to chase yields out here. That's a dangerous game to play. But in any event, if we just take a look at the correlations, and that's really the whole point of even bringing this chart up, is whatever is going to be talked about by the folks on the boob tubes out there, you can just take a look at it. I want to make sure you have some perspective on it. Is this going to be some type of domino effect? The type of effect that it's going to have, it's going to be a buying impact, right? Maybe it is kind of like the downing of a jetliner, right? Back in October a couple years ago. Maybe it is. Maybe it's the outbreak of all of it. Maybe it's another Brexit. Take a look at, just go back one by one by one by one by one, as opposed to two by two by two, and take a look at all of the wonderful October surprises. Take a look at the absolute gifts that have been provided to you and I, courtesy of whatever it is, some scheme that somebody wants to, and it's not really a scheme, but something that somebody just simply wants to, through social media and everything else, just simply, try to put the living fear of, whoever inside of you. And it has been nothing more than what? A buying opportunity. So goodness gracious, I hope that Deutsche Bank is that, because I've been wondering, I've been trying to figure out what is it that's going to go ahead and make this market move lower into October. It doesn't seem to be Trump, that's for sure, right? So he had that opportunity to do that, and he basically didn't get that done. He didn't get that deal done on Monday or Tuesday, whichever day it was out there. And so what is it that's going to go ahead and get this market moving lower? Maybe it's Deutsche Bank. And if it is, count your lucky chickens, because I want you to anticipate that next big move out here. And that is coming to a screen near you. It is probably not on September 30th. No, though it could be, but it's probably not coming on the 30th of September out here. So hopefully it really is Deutsche Bank, and hopefully the news just gets horrible and things start careening to the downside, because I want you sitting back with all that firepower, and I want you to get ready to be able to fire away, because it is probably going to be the single biggest trading opportunity that you and I have for the next 12 months out here. So let's just say, I don't want to wish bad for anything. That's just not a good thing out here. So instead, let's not wish for anything. Let's just wait to see how things play out here. And if this is it, if it is Deutsche Bank, and then it's the DAX, and then it catches a cold, and then a flu, and things start really moving down into October, don't be second guessing. Don't be thinking, oh, geez, I wanted to buy this market at a discount, and now that it's moving down, I'm not so sure. Yeah, you're sure. You're sure you wanted to buy it at a discount. And maybe this is going to be the juggernaut that really knocks things loose. And the good thing is, by looking at this chart here, is there really anything to worry about? Any real correlation? No. This would be nothing more than the market serving something to you and I on a silver platter. And that silver platter usually comes out right around the October timeframe. And this year it's going to be no different. It's going to be the October/November timeframe out here. So watch that 21.32 number out here. You get below that in the ES Mini, and that says to me that, okay, now things start rocking and rolling to the downside, getting ready to identify that next major bottom out here. Okay, so enough of that soapbox out here, but you will say thank you when we catch that next bottom out here. Let's take a look at some other things that are moving in the market. So we don't care about light sweet crude or gold or silver or bonds any longer. We've already taken a look at the ETFs. I've beat the indexes, basically beat that horse to death. We don't want to do that. So let's instead go take a look at some individual stocks with the remaining time that we have, unless you've got a question, and I'd love to hear from you. But let's take a look at Accenture PLC Ireland. ACN is the ticker symbol. Accenture PLC, is that who Phil Mickelson, is that the logo? Is that who he, in essence, plays for? I can't recall, but it might be. I think there was some controversy out there, was there not? What did Mickelson say? I was too busy doing other things last night. I just simply saw a brief snippet that Arthur Anderson, I saw a brief snippet that he said something about the Ryder Cup. By the way, they're playing out at Hazeltine. The last time I was at Hazeltine was when I saw Payne Stewart win the U.S. Open out there. That was an interesting course, for sure, a good course. But I was there during a pretty nasty storm, and tents were flying, and stands came falling down, and it was mushy, and you parked in fields that were just slop. It was still a really good tournament, though. In any event, Accenture PLC, it's taken out a swing point with major volume. That swing has 3.2 million shares. You've done 5.6 so far. We'll be right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so I looked it up quickly during the breakout there. So apparently Phil Mickelson complained about the 2004 Ryder Cup where he was paired up with Tiger Woods. Hal Sutton was the team captain at the time, and Bill's complaint was that he wasn't given enough time to know that they were going to go ahead and use Tiger Woods' ball during the match out there. And there's a huge difference between golf balls out there. So I get it, but crybaby, I don't understand why he now waited, to really talk about it. He did apologize for it, but there is I understand, what he's saying out there. A huge difference between different golf balls that these players use out there. But for the most part, what is it, 12 years later? And now he's bringing that up. In any event, let's just take a look at the markets. Dow's off 220 as we speak right now. I don't have any type of bottoming-ish type signals out here. The level that I gave you, 21.32 and 25, that is the most important. If I take a look at the NQ right now, you are on wave number 5, or 6, I should say. 6, we're in F of a potential seventh wave move to the downside. So watch the G as it forms to the downside. No price relative strength divergent pattern that is out there. But I would say watch that seventh wave move inside the NQ. If that fails to identify a bottom, that will be giving us a big signal. Of course, you'd want to see, in conjunction with that, you'd want to see the ES mini get below the 21.32 and a quarter. The Dow equity futures contract, by the way, they made a high with a seventh wave, which is the letter G, and now you are in wave number 6 to the downside. So number 7 could be coming here soon. So you'll want to watch that, especially as price moves down into that all-important support level for the ES mini. What else are you going to be focused on? You're going to be saying, well, the day finishes just horribly, and then what's the VIX index doing? Well, shoot, today you've got a 25% increase, one-day rate of change, versus yesterday. The routine out here. Now, the trend index is not doing a whole lot. It's trading out at 0.79, or it's calculated at 0.79, not trading, but it's calculated at 0.79 right now. But that one-day rate of change greater than 10%, that says it all out there. So anticipate a bounce bottom in the overnight hours, in the early morning. Don't be surprised if that is what takes place, if that's what takes place out. Be more surprised if that's not what takes place out there. And those are the things really to be looking for. So we've got a minute or so left. Let's take a look at some of the individual stocks that are moving to the downside. We didn't take a look at Tempur Sealy. I guess we did yesterday. That was moving down with volume. We said that this is going to go test the swing point from back here on January 20th. That is still the modus operandi. That's in the 50.80 level. You're at 54.69 right now. That's the leader. This thing is off kilter here. Let me see if I do this. Can I do that? No, it won't even let me do that. And it looks like I'd have to reboot this thing. Biogen, BIIB, though, that looks like that might be the leader to the downside. Volume-wise so far, inside of Biogen, one of the top holdings inside of the IBB, light volume, 625,000 shares to the downside. Shoot, the swing point has got 1.8 million shares. So IBB is not exactly falling apart here, or at least the Biogen, BIIB, that is not falling apart. AutoZone down about $2. No big deal. Really coming back into a breakout area that had volume of 794,000. Oh, my goodness. You're coming down with only 200,000 shares as we speak right now. So AutoZone backing down with some light volume. Well, folks, it's the end of our show. Thanks so much for joining me today. Stay tuned. Our polar bear, David White, soon he's going to go into hibernation. But he's not in hibernation today. And he'll be with you next. And then because it's Thursdays, it's a wonderful lineup because you've got Tom O'Brien from 3 to 5 and Andy Heck to take it on home from 5 to 6. Have a terrific Thursday. We'll see you on Fantastic Friday, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.